All right, let's take a look at these zones. So we talked about yesterday. I won't make this video very long today, but let's go over why these zones are so effective and how we can capture reversals daily in all these different markets. So what is a liquidity grab zone, first of all? All right, so we talked about this yesterday. Let's go over two parts. Okay, first of all, our trend filter, and then we'll get into liquidity grab. So let's talk about the trend filter first of all. The trend filter is comprised of these red and green parallel lines that have various filters put in them so we can capture trend with the overall market. In other words, we're not trying to counter trend trade the overall smart money move. So if the smart money is trying to buy liquidity or do liquidity grab sweeps, which I'll go over, we want to go in the direction of that overall push. In other words, we don't want to jump in front of a runaway train if it's green, and we don't want to try to buy a falling knife if it's red. What we do want to do is we want to look for retracements into these zones, which I'll go over, with the overall trend of the market. So that's number one we have to get right. And that's what this trend filter allows us to do. So we use a Renko, an Uni Renko bar. We use a 1135 we show in the room. Now you can adjust this on your own. I know a lot of traders that trade various different other markets that trade different futures markets, stocks, crypto, and so on. They use different Uni Renkos. That's fine. You can use a lower one. The tick reversal is going to dictate what type of stop you're going to have. So you can go all the way down to traders are going down to a 116, all the way down to 116 to trade the markets using this algorithm. So the trend filter is the key ingredient to making all this work. First of all, because you want to sell retracements with the overall trend direction, and you want to buy retracements with the overall trend direction. So that's key number one. Key number two is the liquidity grab zones. This is very simple. So what is a liquidity grab zone and why are they important? The liquidity grab zones are critical areas in the market where prices have a concentration of orders where reversals possibly can happen. So these zones, and I'll show you these zones, indicate possible market reversals. So let me blow this up to our last one we had into the close. So what it is that they're basically liquidity grab zones is almost a psychological level where you get this market moving higher, you get it moving straight up, and then they come in, they take all the stops out on a reversal. They catch all the rolling position traders, and they like to reverse markets inside of these zones. So these zones indicate an area of high interest, meaning this is really big market interest where you're going to get a high concentration of buy and sell orders. And I'm going to go over market profile too, that about the point of control, how we can trade off that also, just like the liquidity grab zones, because these are really high levels of where there's a lot of market interest in these zones and they should reverse price. So what we want to do is the market likes to what's called have a liquidity grab sweep or liquidity grab. So what they're doing is they like to bring it higher, and then they like to reverse it, catch the rolling position traders on the counter trend traders, we call them, and then like to reverse inside of these high probability zones. These are critical levels where there's large volumes. There's a large volume of sell side liquidity or buy side liquidity when they come inside of these zones. So when you get that, what they're doing is they're sweeping liquidity, or what's called a liquidity grab. They're grabbing liquidity to take the market higher. So when you hear of liquidity grab or liquidity grab zones, essentially what the market's doing is they have it going in one hard direction. They're pulling it back against the overall trend to grab these orders or sweep these orders where there's a lot of buy side and sell side liquidity inside these zones, and then they will continue it in that direction. So when you see that little pullback, this little V pullback, this is what's called a liquidity grab. When they're pulling it back inside of the zone for continuation, that's essentially what we're looking to do. So these are very critical areas where significant market players will come and bring them inside of these zones, which triggers a high degree of order flow known as a liquidity grab or a liquidity grab sweep. Okay, there's a lot of interest in reversing price inside of these zones. All right, now, how can we look at that and say, hey, okay, well, how can we use this in our trading? Well, knowing these zones, so how are these zones mapped out? These zones are mapped out on the algorithm. These little dash green levels, that's the buy side liquidity. So you can see that this is known. These do not repaint. This level was known at 234 yesterday before the market even came down to it. Got inside the zone. If you have your speakers on, this algorithm will alert you when this yellow trigger came in. It will fire on your speakers. This yellow candle will form, or this yellow Renko candle will form and close. That is called our entry candle or trigger candle. Okay? So what the market did, they marked the market up. They needed to grab liquidity. They pulled price back inside of the liquidity grab zone. We're looking for a reversal. We got the reversal. A yellow trigger entry will fire and a green arrow will fire, and that's your high probability potential move to the upside. This market moved from 69.09 to 69.45. '09 to 45. From just this point of 234 to 1451. All right, so that's essentially what a liquidity grab zone does. They're pulling it back to sweep orders or to grab liquidity to bring it higher in that direction. So we need two indicators on the chart to tell us what we're doing. One, what is the trend? If you look, if I skinny this chart down for all day, and we go 9:30 or 9 o'clock all the way to the close, let's skinny it down, and let's take a look at price action. So from 9 o'clock all the way until 11:30, the trend was up. So what you want to do is look to buy liquidity grab zones. They're trying to mark the market up. Very simple. The trend filter turned red. What they're trying to do is mark the market down from 11:30 until 1 o'clock in the afternoon. They're looking for sell side liquidity. And what you're going to do is look for liquidity grab shorts. Then at 1 o'clock in the afternoon, all the way till almost 3:30, you're looking for buy side liquidity, where they're looking to look for liquidity grab longs. You're going to look for long side liquidity buys. So that's how you're going to keep yourself on the right side of the market, just by looking at the overall trend. You're 50% there if you get the trend right. What a lot of traders like to use, they use moving averages, or they use the MAC, or they use some type of other trend filter that's very lagging, and they tend to get beat up during the day. They don't think prices can go higher, and they don't think prices can go lower. And that's the problem, is that you have a lot of education out there that educates, well, you buy low, sell high. Well, not if you're going to jump in front of a runaway train. You're going to get ran over or try to catch a falling knife. You're going to get, taken out of the market. So that's why the market works so well. It's so orderly. Is that when this market's, let's look at the uptrend first, and this market's moving higher, and it was moving higher from this liquidity grab zone. This liquidity grab zone caught this beautiful move right here. Look how it stopped right in the liquidity grab zone. The reversal candle happened right there at 224. So they caught liquidity here. They caught all the rolling position traders, because what you're doing, you're looking to buy these zones. You're not looking to sell the zones. You're looking to buy the zones. They grab liquidity right into the zone. The trend filter's green. Got inside of it. Renko reversal. And they just move it higher. 64 to 12 on the first push up. Then they pull the market back, grab liquidity right inside the zone again. These zones are very, very important critical levels. Grab liquidity, pulled it upside again. Then what they do again? Same thing. Where'd they stop it? You got it. Right inside the liquidity grab zone. Grab liquidity again. Brought it higher. So you can see what they're doing. What they do down here when they did the trend change. Before the moving started. Right into liquidity grab zones. Right at it. Grabbed it. Took off with it. Grab liquidity. This is yesterday's price action. This is not looking at, we're not cherry picking trades. We're showing you all the trades yesterday for the entire trading session from 9 to 4 o'clock Eastern Standard Time, so you can get an idea how liquidity grab zones work. Pulled it back, grab liquidity, and you can see what they did. This is the accumulation phase where they accumulate a lot. Typically, if you see something like this where they're just grab liquidity, take off, pull back inside the zone. Take off, pull back inside the zone. It's getting ready for a big possible push. When I see 2 or 3 in a row like this, it tells me I got a big possible push coming. Get ready. And then she just shot out like a cannon straight to the upside. Vice versa, the downside's the same way. They reverse it. Here, they try to grab liquidity because the market's rolling down really hard. Try to grab liquidity, reverse it. 67 pull in, got as low as 37. 30 points, S&P. Not even a matter of 11:51 to 12:17. In the morning, what did they do? Right after the New York Open, look at the zones. Watch how critical these zones are. 9 o'clock, let's start it. 9 o'clock, there's my zones. Reversal, right inside the liquidity grab zone. Next pullback, where it reversed, right inside liquidity grab zone. Next pullback, where it reverse, right inside liquidity grab zone. All 3 of these inside liquidity grab zone. 1, 2, 3. What did I tell you? Just happened before. If I see them stack like this, where it's getting inside the zone, inside the zone, inside the zone, reversal, reversal. This is a major accumulation phase going on. They're really sweeping orders right here. Watch if you get 3 in a row like this or 4 in a row. They're sweeping orders. Look how they swept orders and then they shot it out. Bam. 53 all the way to 69.08. Sweeping orders with trends. Sweep, 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 sweep. 3 in a row. Shot it out just like that. So when I see a consolidation like this getting ready, and you can see when it's occurring because you'll get sort of a sideways movement on the trend filter. Grab liquidity, grab liquidity, grab liquidity. And then the key for me is once they break through these pivot highs on these liquidity grab orders, the market should follow through to the upside. So that's what liquidity grabs are. They're critical levels that you're looking for major reversals. All right, these are just areas where buy side and sell side liquidity is happening with the overall market to capture the rolling position traders. It's essentially what it does. All right, you just got to stick on the side of the filter. Now, if I were to take the algorithm off and only put on, just to show you how effective these levels are, take the trend filter off here real quick. Let's just see how it works in between these zones. Zones are very, very effective. Because these zones are where you're looking for the buy side or sell side liquidity grab or sweep. And it's a major heads up when it's coming up. So if I were to put this on here, let's get the trend filter off there completely. And let's just take a look at these zones. So you can see what the market's doing. Look how it comes right inside the zone without anything else. We use a trend filter to see which direction we want to go to buy and sell the zones. But look how the market is reversing inside of these buy and sell zones. Reversal, 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 reversal. On the sell side too, when there's a buy side reversal, right at the zone, reversal. All right, in the morning, when they're moving the market up, look at the zones, reversal, right at the zones. These are critical levels. This is without anything else on the chart. Critical levels where the market should reverse. Look where they're reversing, right at the liquidity grab zones. Reversal, 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 reversal. Look at this zone, had 3 reversals in a row. Now, like I said, when I find that it's reversing inside of the same exact zone 2 or 3 times, meaning if I got to project a zone, that's typically when they're doing a major accumulation. They're doing a major liquidity grab. 1, 2, 3 reversals inside the zones, and the market just takes off. Comes back down, misses the zone here, but catches right inside the zone again. And there we go. So you can see how these zones are very, very effective. That's what we want to do. We want to use these zones until they're broken with the overall trend to try to capture these moves.